and welcome to Tax Reporting and Record Keeping for Writers and Artists. My name is Amy Guildroy. I am a professional paid tax preparer. I am also an enrolled agent, which means I have passed the 3 very nasty exams that the IRS provides for people who wish to show that they are competent to work with tax information. Today I am here assisted ably by my wonderful writer husband, Dave Schroeder. Dave is the author of the Xenotech Support Series and the Congruent Mage Fantasy Series. He's the reason that I got interested in small business record keeping and tax reporting for writers. Imagine how that connection works. Today's session will be general information on small businesses, but tailored for writers and creators. You do have some special needs, then I want to make sure we cover those. I am conservative about tax issues. I don't want anyone to regret taking my advice 2 years from now and having some kind of tax problems, so I do tend to go for safer, conservative choices. Other tax advisors may have their own styles. And last but not least, everyone's individual situation may make some of this information more useful or more relevant than the rest. Always check with your own financial team if you have any questions.
Great. So where do we start?
We're going to start by making sure, is it a business or a hobby? One easy way to tell that you're a business is if you're making a profit from your creative work. The IRS has no problem if you're making a profit, you're reporting your profit, you're a business, you're treated as a business, no issues. What if you're not making a profit? Well, the IRS wants to know, do you intend to make a profit? How do they even tell? They have a multi-pronged test that they use. One of the questions is, do you intend to make a profit? How do you tell? Well, have you ever made a profit in this before? Have you ever done something like this and made a profit, even if it wasn't exactly the same thing? So a writer who goes from romance novels to science fiction is certainly someone who has a track record of success in writing. Another test is, did you make money 3 years out of 5? Last 3 years out of 5 is a standardized business test. If you have a down year, 2020 anyone, and you've made a profit in the past 3 years out of 5, there's not a problem that you had a bad year. Once in a while, that happens. Another test is, do you put regular time and effort into your profession? That can be as easy as having a schedule where you write at certain times, or where you always like to paint in the morning so you get the right lighting in your studio. Anything that shows regular, consistent time and effort into the business. Another one is, well, if you want to be a professional writer and you tried writing science fiction and it's just not working for you, so you switch over and try writing post-apocalyptic fiction. Maybe that's still science fiction, not my area of expertise. The idea is that if you're willing to pivot, try something different, because when you keep banging your head against the wall doesn't move. So if you want a profit, you're going to try adapting yourself to whatever the market needs. Another test is scale. If you made $400 from your beautiful landscape paintings and you spent $15,000 to travel around the world visiting all those beautiful places so that you could paint them, you are probably pursuing a hobby and not running a business. Another good test is the reasonable and rational test. Would a reasonable person who wanted to make money doing what you're doing spend money the same way you did? We're going to talk more about that in detail when I get to the record keeping section more.
What about incorporation? Should writers and artists incorporate?
The short answer, that depends. The longer answer, incorporation acts as a shield between your business activity and your personal life. Usefulness, the need, the benefit of that shield varies depending on your individual situation. Talk to a lawyer, or at least talk to a CPA, an enrolled agent, somebody who's familiar with your individual circumstances.
What about insurance? Is that something I need?
Again, additional liability insurance, sometimes called umbrella insurance, is always an option. Ask a lawyer.
What if I create with a partner?
This session is geared to individuals who run the small business. Partnerships do not require more formal structures any more than individuals do, although many people prefer them because that gives them more structure. But tax reporting is different when you're a partnership. The stuff I'm going to cover today about record keeping, though, applies to all different kinds of businesses.
I've heard about this thing called an S Corp. Is that something I should consider?
In general, if you are still a beginner or you aren't making a whole lot of money, an S corporation does not benefit you. When I'm talking about a whole lot of money, I'm talking about the Social Security wage base in 2021. That's $142,800. So really, that's a fair amount of income. If you don't reach that level, you probably don't need to be an S Corp. Again, talk to your personal tax preparer or ask a lawyer.
When I started, you made me get an EIN. What's that? What was that and why?
Yes, an EIN, which stands for Employer Identification Number, is the tax ID a business uses. They probably ought to be called Business Identification Number because you don't have to have employees to get one. However, the whole point of an EIN is to avoid handing your Social Security number out all the time to everyone who will ever pay you for your creations. They're free, highly recommended. You can get them through the IRS website at irs.gov. Lots of companies, including Amazon and Etsy, just for example, ask for your tax ID when you set up your online account. You must provide your tax info before they pay you for your sales. Give them your EIN. Protect your Social Security number.
I'm ready. What comes next?
Really, what comes next is record keeping. Nobody ever started a business, whatever the business, mowing lawns, doing hair, baking cupcakes, writing novels, painting portraits, driving a truck, software consulting, whatever it is, because you enjoyed record keeping, maybe bookkeeping. But in general, record keeping is a necessary part of being in business, but not the whole point of the business. When it comes to record keeping, just because you can do it yourself doesn't mean you have to. Sometimes it not even should you. If you can't do it yourself, if you don't want to do it yourself, if it's distracting you from doing something creative, get help. There's nothing that says you have to do everything yourself just because you're running the business. But even if you delegate, you as the owner are responsible for complete and accurate records.
Okay. So what do I need to track?
Start by tracking where your money comes from. That's the income. Who pays you for your creations, and how do they pay you? Sweetheart, I'm going to borrow you as an example. Your income comes from 5 different places. First is Amazon. You're an Amazon author. Second is Audible. You had one of your books recorded professionally on your own. The third is Podium. Podium is an audiobook recording company out of Toronto that has recorded all of your fantasy novels so far. The fourth is PayPal. PayPal is how you collect money when people order books through your website. And the fifth one is Square. Square is how we take credit cards when we go to conventions and you have a sales table. I will pass on the note to all the Square users out there. The smartest thing anybody ever told me about Square was to use it to track your cash transactions as well as your credit card transactions. Saved me a whole bunch of index cards and manual notes, and it's all consolidated into one place, which is really nice. So that's all the income. At the end of the year, I can go through and look at my bank account and see, does the amount of the Amazon sales we received match the reporting document that Amazon sent for year end? Every year it has, and that's an easy way to keep track of it. Audible also sends out year-end summary reports. Podium does not, but they do provide summaries if you ask for them. PayPal does not, but they also provide year-end reports that are easy to access online. Square, same thing. I can get to the year-end reports without any problems and see if the amount that they recorded on their records matches the amount that was transferred into our bank account. Because we've been doing this for a few years, I'm used to where the money comes from and how to track it. Normally, I just keep an eye on the bank account to make sure that I'm aware of the money coming in, and we're fine. Now, if you have sales, if you're an author and you have sales through, say, Amazon of more than $600, they will send you a tax reporting form. It's a 1099 miscellaneous. Royalties are reported in box 2. If you are a creator on an Etsy platform, you will not get a 1099 miscellaneous. You may get a 1099K. The 1099K is for sales that exceed $20,000 or 200 transactions in a calendar year. And again, if you don't make that threshold, they don't report to the tax authorities, but they do provide information to the owner for tax reporting purposes. We have a link somewhere in the presentation documentation to sample forms for a 1099 miscellaneous and a 1099K. They're pretty straightforward once you're used to them, and the online companies use a version that looks just like the samples. Okay. If you receive income as a creator, whether it's reported to the IRS or not, whether it comes in on a 1099 miscellaneous, a 1099K, or just from your own year-end summaries and tracking, all such income is properly reported on Schedule C when you do your taxes. We're going to talk about Schedule C more later.
What else do I need to track?
We're going to track where your money goes. Expenses are harder than income because they are so much more varied. Expenses are things you spend money on so that you can produce, package, market, ship, display, whatever, the things you create and sell. Expenses are also tax deductions if they are reasonable and necessary for the conduct of the business. That's the more formal definition of you've got to spend money to make money. This definition covers a wide variety of expenses. I use an Excel spreadsheet to keep track of expenses. Some of them come up every single month, like a subscription. Some of them are one-time or related to the one specific book title. Set up categories that work for you.
Like what?
Okay, here is a laundry list of sample business expenses. Writing software, art supplies, graphic software, a cloud backup subscription, website hosting, advertising bookmarks, a class in Facebook marketing, cover art, editing services, printed books, professional photography, specialized lighting, travel to conventions to promote books or learn about self-publishing, framing mats, studio time, attendance at a critique group, padded mailing envelopes, custom shipping boxes, credit card merchant fees, bookkeeping services, tax preparation fees, printed signs, display shelving, and more. Combine these into larger categories when they're appropriate. I usually combine marketing, promotion, and advertising all as one thing. Another would be software as a single category. It might be art supplies and materials as opposed to display materials.
What other records do I need?
I want to say a few brief words about inventory. If you have physical things to sell, copies of books, boxes of pottery, you need to know what you have. That's an inventory. The Schedule C form, I'm still coming to that, asks for inventory in the cost of goods sold section. This only applies if you have more than 25 million, yes, million, in gross sales on average per year.
I wish.
If you have more than 25 million in sales per year, first, tell me your secrets, and second, this isn't your session. If you don't reach that 25 million threshold, ignore the cost of goods sold section on your tax forms and simply include your costs with your other expenses.
What about mileage?
Let's talk about mileage. Mileage is deductible when you travel for a business purpose. This can be travel to a convention, which you attend with a primarily business reason, travel to the office supply store to print new display signs for your tables, or to any place for a business reason. If you mix your business and travel with personal stops, only the business part is deductible.
Give me an example.
Yes, we went out to SoonerCon in Oklahoma City a couple of years ago. The direct travel is deductible, but not the side trip to Crystal Bridges in Bentonville, Arkansas. That was not on the direct route, and we did go out of our way to visit there. I sat down with Google Maps, figured out what the direct mileage was between our home outside Atlanta and the convention hotel in Norman, Oklahoma, and only included that much mileage when I did the taxes for the year. Another example, more local, would be someone like you who's efficient about running errands. Suppose your route one morning goes from home to the coffee shop, to the library, to the post office, where you are mailing a book that was ordered through your website, to the gas station, to the grocery store, back home. Only the legs from the library to the post office and the post office to the gas station are business related, and only that part is deductible. Now, if you want to deduct mileage, you do need to keep a log. Once upon a time, keeping a log for mileage meant paper, pencil, keep a notebook in the front seat of the car. Nobody does that anymore. You can if you want to, it's not illegal or anything, but nowadays we have apps for that. Or you can use a computer spreadsheet or any kind of tracking mechanism that works for you as long as you use it consistently and as you go. Okay? The standard mileage log requires the date, the purpose of the trip, the odometer at the beginning of the trip, the odometer at the end of the trip, and therefore the mileage that you incurred before a business reason. In 2021, standard mileage is 56 cents a mile, and that is usually so generous that everybody who wants mileage takes the mileage, and we don't worry about the actual cost of putting gas in your car or changing the oil or rotating the tires or getting insurance or anything else. One last thing on mileage. You can only deduct mileage on a car that you own or lease. If you had to borrow somebody else's car because yours wasn't up to the trip to the convention, you don't get the mileage. It's not your car. It's not your cost.
Anything else?
Lots of people want to take an office in-home deduction. The office in-home deduction is available for self-employed people who run small businesses. First, though, there's some caveats. One is that you have to have a profit before you can use the office and home deduction. If your business is not making money, the office and home deduction does you no good. Second part is that the area for your office has to be a defined area regularly and exclusively used for business. You can't share it with somebody else. You can't let your kids use that space when one is getting on the other's nerves and you all have to get your homework done. The exclusive part is serious. The regular part can be a little looser because it doesn't have to be every day or a set time period, just regularly and exclusively. The deduction is $5 a square foot for a space up to 300 square feet. Most, like spare bedrooms or so, are maybe 150 square feet maximum. So this is a pretty generous deduction. There's a longer version of the office and home deduction that benefits people with very large spaces, like a studio space, or who have some reason not to take the $5 a square foot, like very expensive office areas for some reason.
Is there anything I can't deduct?
This is where I mentioned earlier that I tend to be conservative. I tell people they can deduct their cell phone expense if they can show me how having a business in their life has increased the cost of their cell phones. Modern cell phones are usually flat rate. There's no special billing for long distance calls. It's very hard to say, oh yes, I used my cell phone 37% for business last year, so I want to deduct 37% of the cost. It just doesn't work like that with modern cell phones. Also, home internet. Technically, home internet is rolled into the office and home deduction. So if you're deducting $5 a square foot for your office space, that covers your internet deduction. Not everyone chooses to include internet in their home office deduction, but again, internet is something that comes into your home and you use for a mix of personal and professional. So if you can figure out how much of it is to support the website for your business as opposed to checking out the scores on the most recent Hawks game, you're welcome to show me how you did that.
How do I tell when something is or isn't deductible?
That's where the reasonable and rational, primarily for business, comes into play. I want to tell some stories about cruises. Now, you and I really like cruising. It's been a wonderful way to take vacations to places all over the world now. And as it turned out, on some of the longer cruises, you brought your computer along and you were able to write. And this was a terrific side effect of the cruise. Something about being away from all the responsibilities of home just got your creative juices flowing or something like that. So when you came home that first or second time, you posted on Facebook that you'd managed to write 20,000 words during the 2 weeks that we were away cruising. And of course, somebody commented, well, of course you're going to deduct your cruise as a business expense then, right? Wrong. Your tax professional wife said, absolutely not. The primary purpose of the trip was pleasure. We enjoyed ourselves very much. The writing was a nice bonus, but it was not the primary purpose of the trip. On the other hand, it was 3-4 years ago, you went on a writer's cruise. Now, this is something that was organized by a group to provide writers with professional support, not just time away from home to write, but also seminars on finding an agent or writing to market. I didn't go, and the cruise happened to be on a cruise line that we don't generally prefer. So yes, I deducted the expenses of your attendance at that writer's cruise because you primarily went with a business purpose.
Can you talk about how donations work? Are they deductible?
Okay, the short answer is no, there's no deduction for donations. I don't want to go into the accounting that explains why that is the right answer. Just a little bit, if you donate a book instead of selling it, you don't receive, say, the $10 that the book would have cost. That means the income that you report at the end of the year is $10 less than it would have been if you'd sold that book. You're always going to write off the expenses of producing the book. That's part of your inventory, part of your professional expenses in getting the books, the author copies in the first place. But there's no separate deduction for giving away work. It would be really nice, but unfortunately, on the accounting side, any deduction for donations to charity from your business only reduces the income that you report. You can't double dip by deducting the value a second time.
Well, now that I've got all these great records, what do I do with them?
Okay, here's where we talk about Schedule C. Schedule C is your tax reporting form. Again, there's a sample Schedule C on the linked information with the presentation. Schedule C is for small businesses owned by one person only, whether you are incorporated or not. Schedule C calculates your profit or loss for the year. Schedule C is filed as part of your personal Form 1040. It's an additional schedule, just like Schedules A, B, D, E, and so forth. The income or loss from Schedule C is combined with all your other income onto Form 1040.
What goes on a Schedule C?
It starts with information about the business. If you have a name for your business, it goes on Schedule C. What kind of business? The IRS does collect some categories and codes on businesses filing Schedule C for statistical reporting purposes. You also include your EIN if you have an employer identification number. There's also a section for income. For creators, that's almost entirely just the one line on Schedule C. Line 1, it says income. There's some other stuff if you have to make returns and allowances, but that mostly doesn't apply very much to creative people. The bulk of the form is for expenses. And again, expenses vary a lot more than income. Expenses are tracked only by the person who's spending the money and not by any third party. So there is lots more emphasis, lots more focus on the expenses reported on Schedule C. The bottom half of the first page of Schedule C has preset lines. These lines have not changed substantially since Schedule C was first included in the tax code in 1950 something, and you can tell by looking at the categories that it's done very definitely with a we're manufacturing cars and widgets and not we're tracking a creative business. But that's why you have freeform lines on page 2 where you can include the things that are specific and pertinent to your business that aren't already defined on the first page. Remember above I said put in the categories that matter for you and combine them in ways that make sense for your business. You're going to transfer all that information onto your Schedule C, page 2, where the lines are available for whatever you need.
How does Schedule C affect my taxes?
Okay, Schedule C tells you if you have a profit or loss. You probably have a pretty good idea of this before you fill out the Schedule C at the end of the year, but sometimes people do have surprises. If you have a loss from Schedule C, the loss reduces the amount of other income you pay taxes on. That is, the loss from Schedule C offsets some of your income from somewhere else, whether that's a W-2 job or some other endeavor, or I don't know, maybe your stock portfolio grew a lot last year. Losses on Schedule C reduce income. This is one of the reasons the IRS takes a very hard look at losses and why there's so much information and so much court history on what is a hobby and what is a business. Now we're hoping that you are a success and that you will make a profit. Your profit, not your gross income, only the profit, is subject to income taxes. If you make a profit, again, you're also subject to self-employment taxes on Schedule SE. We included a Schedule SE in the linked material. Schedule SE is how self-employed people contribute to Social Security and Medicare. The tax rate is 15.3%. If you work on a W-2, half of that is paid by your employer and half of that comes out of your paycheck. When you work for yourself, you pay both halves and the total is 15.3%. This one trips people up because they don't expect it. Please plan for success. Set money aside. Make quarterly estimated payments. Have more money taken out of your W-2 job. That's actually what we do. I have a W-2 job. I take money out of my W-2 to cover his profit from the writing business. Do something to account for the extra tax. You may need professional help to figure out how much tax you're expecting to pay so that you can make quarterly payments. You can always adjust these amounts. Please get help. Exact amounts vary from person to person and are really more than I can talk about here, except to say please plan for success. So this has been a general introduction to the big issues around taxes and record keeping for creative businesses. I hope I have increased your understanding of what is involved in being self-employed as a creator. You may have lots of other things going on in your financial life that impact your business and taxes. Everyone is an individual. Everyone's situation is different. Please, if you have questions, get advice from your own support team. That's paid tax preparers, which is what I do, exists to help people with these issues, to personalize the calculations. Lawyers, financial planners, CPAs, enrolled agents, all of us are here to help you. Yes, you do pay us for that. There's lots of information on the IRS website. There are many reputable sources online. I'm not going to go through any of the references here. Do some research. And in conclusion, please direct all your creativity to your art and not to your business records and tax returns. Thank you for your time and attention today.